Welcome back to the channel, everyone. Today I have a very quick and very interesting thing to talk about, and that is the Ethereum merge and the potential price action we could see for Ethereum in the coming weeks. So of course, this is not financial advice. I'm not a financial advisor, but you're going to want to listen to what I have to say. The Ethereum merge, I believe, is happening on the 13th of September, which is a Tuesday. And it's going to be a very big momentous event. Now, the first thing that everyone always seems to ask is, is this going to mean really cheap gas? No, that is not this phase. Cheap gas is going to come when sharding comes, in theory, but that is still not, that's still a ways away. Hopefully 2023, but potentially 2024, 2025. The one that is happening in September is the merge, right? And what this means is that proof of mining, or proof of work and proof of stake are going to combine, and there's just going to be proof of stake. Now, I'm not going to go into the full details of what that means. The big ones are that there will be less, the transaction fees will go to less people and things like that. So there will be less systems producing Ethereum. So essentially Ethereum could become deflationary. That isn't perfectly confirmed until we see it in action, but essentially it's a good thing in the long term for Ethereum. Not necessarily, the miners might not necessarily share that opinion because they can no longer mine it, which is great revenue source for them. So there's all that out of the way. Let's talk about what I'm looking at right now in the charts and everything. First, we're going to go over some really quick fundamentals, right? So there's a few announcements that have been happening by different members of the Ethereum team and other large people in the space talking about the merge as it gets closer to that date. The date keeps moving slightly, but it's pretty locked in now, but they keep discussing it. In this case, Tim Bako mentions that it's going to be, that he mentions that the merge is coming on August 19. Terrence.eth mentions that it's coming, and that's August 12th. So like there's a lot of different dates here, a lot of people mentioning things. And why I'm talking about this, the latest one from Tim Bako is saying some of the confirmed dates and things. He says ETA September 15. I think this has since been changed, but that was on August 24th. That is one of the more recent announcements. So why do I bring this up? Because I want to talk about this chart here. This is the Google Trends chart for worldwide data. So encompassing all the world and their search trends and things like that. China leading the pack, which surprised me. Anyways, for the term ETH Merge, all right, what does this mean? There have been lots of peaks and troughs and things like that. Some major notable ones include July 18, August 11, August 19, 25, and the 30th. And these all indicate major points of the ETH Merge search activity, but it is on an incline going upwards. And I want to talk about that because it's really important. And even if you look at the past 12 months, you can see that in recent times, it's way up. People want to know what's happening. The activity has never been like this before. Scoriox, why are you telling us this? Why does it matter? I've marked these key dates on the trends to my TradingView chart, right? So here they all are here. Now, the first thing I'll point out is you can see that I would indicate 4 of these, indicating probably bearish sentiment came straight after. Big news and big search activity kind of occurred. This last one, less so. And there's one earlier up here. I think it's soon before the start of this run up. So it's almost a 50-50 split. It's probably more iconic to the downside, but this is based on announcements and things like that rather than the actual merge itself. Now, what does this mean? This means, I think, looking at this sort of data, it's really inconclusive what's going to happen with the merge. But there is this famous saying in tech and crypto and stocks and all that, saying buy the rumor, sell the news. So if this is buying the rumor, I am very afraid for what selling the news is, but that doesn't have to ring true for anything like this. As they say, history doesn't often repeat itself, but it often rhymes. So there is a few other key things we need to look at. This red line here. And there's one really major one I'm going to show at the end of this video that is really standing out to me. So stay tuned. It's really, really important. This red line here is the 50 moving average. Okay. What that means, or it's 55. I'm pretty sure it's the 50 moving average. What that means is a lot of algorithms and bots and things. And I got this from market makers, so don't shoot me, Brendan. A lot of algorithms and bots and things trade these markets, particularly in stocks, maybe less in crypto, but a lot of people set up bots and things to say, oh, if it touches the 50 moving average, sell the token and stuff like that. So interacting with this 50 moving average is a really big point. If it breaks beyond that, I see it definitely going to the 200. I don't think it's going to break through in the macro environment, but I definitely see it going there. So what I'm mostly watching for right now is to see how it interacts with this moving average. But as you can see in past history, it lost to the moving average here on February this year, broke above it a little bit, but not really. And there was no volume there, as you can see, and then dropped back down. And later in February, did the same thing in early March, right? So you can see that people are trying to pump the price maybe and things like that, but they're mostly fake outs to try and trap liquidity and take all of your money if you are long in the market. So I expect something similar to this to potentially play out here. And I'm just saying you guys should definitely be wary of it. Of course, this is not financial advice. And you can also see what happens when it comes up and hits the 200. It doesn't do too great. When it breaks above the 200, it typically goes on a huge bull run. When it breaks below it and then retests it, you have some pretty big concerns. And you can see back in the previous bear market, it hit the 50 a bunch of times and failed it every single time without even peaking up above it. So we've got to watch this on the chart. It's really important, but you can see that the inverse happens. When you break above it, it uses it as support and keeps going higher. So at the moment, since overall sentiment is quite bearish, I'd be looking for this to break downwards, but that is obviously not confirmed, and you guys should not take my word for it. Do your own research, but that is really important. So this last bit of information I want to talk about, if I really quickly delete these, is on the 4-hour chart. I have a special money flow indicator that I've gotten from market makers down here, right? And I've got this green zone. Let me zoom into that. I've got this green zone at the top there, which indicates it being overbought. And then price typically comes down somewhat and things like that. Now, I will say that in really past history, it's been a little bit unpredictable. Like over here, it touched the green box and didn't really do anything. Over here, it touched the green box. It took a long time, but it did decline, even if temporarily. But in recent history, these past three, this was pretty much indicated the top when it touched that box down there. As you can see, it touched the box up the top. On my second indicator, nope, I don't want to do that. I want to minimize it. There we go. So you can see that it indicated pretty much a top in this area. It indicated a top again in this next section, indicated a top again at the top, right? So you can see the pattern here. The big thing to note is this is actually all bearish divergence. So basically that means is if the money flow indicator or any volume indicator and even the RSI and things declines as price increases, then that is a major divergence. And you can usually see that play out in this sort of fashion where we got a, what was it? A 30% decline. Now, are we doing another divergence? Yes, but we're doing an opposite one, right? Where the money flow indicator increases and price decreases, all right? Also opposites. That's another divergence. So we're actually creating one at the moment. Obviously, given this goes down and given the price doesn't exceed the previous high. But the other thing to notice is the 200 moving average on the 4-hour, it's almost touched it, okay? And volume has been weak, not too bad in this recent movement, but it has been relatively weak. So I just want you guys to be wary that it's looking, Ethereum is looking relatively bearish. However, okay, if it can conquer all these obstacles and come out above all the odds, even if that may seem surprising, that would actually be really, really bullish. Tie that in with the entire merge scenario, and you could see quite a decent run from Ethereum. So I'm saying it looks bearish to me, but I'm not saying that it's gone into a full-blown tailspin or anything just yet. And I'd definitely be looking for it to make new higher highs. And if it does, I would definitely be considering that it could go higher. I'm not necessarily saying buy into the market or anything like that. Every asset is a risk. Every investment is a risk. But it might be one of those times to start just kind of looking at the ecosystem and getting back involved, because you do not want to be out of this market for too long, even if that's building, helping, finding different games to play. I don't know. Just get involved with the market. This space is pretty amazing. I love it so much. But yeah, I hope that was helpful. I hope you guys learned something. Have a good day.